Hello, everyone. My name is Lee Garvey from Willis Towers Watson, and welcome to the session today on green finance and the use of credit insurance. I'm very pleased to be joined today in today's discussion with Eugene Tan from Euler Hermesthis and Matthieu Le Bret from NodeLB. We're going to be looking at a number of different topics in relation to renewables financing and also how that relates to credit insurance. And I'd like to start off discussion by asking my panelists today to introduce themselves and also to provide an overview of their company and I guess the importance of green financing to your institution as well. So firstly, over to Matthieu.
Thanks a lot, Lee. Good day, everyone, and first of all, a great pleasure to be here and enjoy this discussion with you and Eugene. So I'm Matthieu. I'm heading asset distribution for the APAC region in NodeLB. NodeLB can easily be considered a pioneer, considering our North German origins in renewable finance. And renewables are really part of the bank's DNA. We've closed numerous wind farm transactions in Europe in the early days of the push towards more green energy there. And we've established some very strong ties with most of the European sponsors. WPD, for instance, is headquartered next to our headquarters. We gained over the years some strong expertise in arranging the projects. Our track record speaks for itself. We've done 170 project finance deals in the past 5 years, out of which 3/4 are renewables. So that's around 125 deals. 2/3 wind, 1/3 solar. In APAC, we've done 30 projects so far for a total of 2.5 gigawatts power. Our approach to renewables is we focus on core markets being Australia, Japan, Taiwan, and India. We also pursue as a bank an MLA strategy. And lastly, for this introduction, we are probably not the cheapest bank in the market, nor do we want to be, but our core strengths are our experience, extensive experience in arranging those renewable energy financings, our strong relationships with the sponsors and particularly the European sponsors, and our time to market.
Excellent. Thank you very much, Matthieu. Eugene, over to you.
Yeah. Thanks, Lee. Thanks, Matthieu. So firstly, thanks, for having me here to be part of this discussion. I think it's a great honor. I think I represent the transactional unit cover in APAC, so I'm heading the team out of APAC. Euler Hermesthis essentially is a trade credit insurance company with more than 100 years of heritage. What my team represents is the transactional unit cover, which covers the single risk situations for the structured and political risk market, essentially. So we're better known as the CPRI market, for those who know. What we do is customized solutions for product underlying ranging from trade finance, corporate loans, asset-backed, all the way to project finance, with customizable wordings and tenors ranging from 1 to 15 years. We have, on a case-by-case basis, been able to even cover up to 20 years. So that's quite a bit of nutshell for us. Transactional cover unit as well. We have been at least been established for at least 10 years so far. So it's actually 12 years actually, because we kind of lost 2 years in COVID. Now it's already 12 years now that we speak of it. So yeah, that's essentially where we are today, and we are looking to do more. In fact, and we have been covering project finance, since 2018, the end of 2018. And looking back this past 3 years, I think we have covered quite a wide range, ranging from the first, Taiwanese wind farms, all the way to some railroads, energy related projects, water projects as well. So it's a really great pleasure to be, discussing this topic here in this forum. Yeah, I'll let Lee continue the rest of the questions first at this time.
Great, thanks. Thanks very much for that, Eugene. I think just to sort of set the scene a little bit. So in terms of the structured credit and political risk market, as you touched upon, Eugene, it's been a long time supporter of banks, and I think the market has developed the product offering extensively well over the last sort of 10 years. And you mentioned there about project financing, and then this development of looking at wind farms, etc. How has that sort of process developed at Euler Hermes? So what sort of factors have given you comfort to look at these sort of deals? I mean, sometimes project finance, depending on the market, whether it's a mini perm or a term market, you could be looking at very long tenors. You could be looking at sort of new technologies. What sort of things has given you comfort to sort of push the boundaries and to support clients in those areas?
Yeah, no, good question, Lee. I think to start off, it's important that we find the right partner. And when I mean right partner, I mean the right bank, typically strong PF banks with a good track record and expertise. On top of that, usually these banks are also very comfortable to hold a sizable retention. This gives a really good partnership approach, and it also aligns the interests with the insurers. On top of that, we also do look at the strength of the sponsors, the motivation of the sponsors for the project as well. On top of the obvious strategic importance of the project, in some cases for the country, how aligned with the government policies, or to the extent the government has pledged support to the project, either explicitly by guarantees or through favorable policies of concessions, even tax breaks, or have they made public commitments, whether they have budgeted for the project or implicitly, maybe alluded to some kind of support that they would develop in the supporting industries as well. All this would be very crucial. And further down the road, then we look at also the expertise of these EPC contractors that would be engaged. What are their track records in those kind of geographies and handling those similar projects in the past? Of course, last but not least, we would also have to consider what's the governing law and jurisdiction for the contract, the project itself. Essentially, what are the security packages that's being offered under the project, and what are the other international project finance companies that, when I said sorry, I meant project finance banks that are participating on this project as well. So ideally, you would like more than one strong international bank that can come in together. This pooling of expertise can be very, very crucial if there were any situations and you need to work out. The track record and expertise of these partners will be really almost to say invaluable, I would say. Yeah. So I mean, that's just in a nutshell. Yeah. Feel free to ask the next further questions.
No, I think it's a fantastic explanation. And Matthieu, from your perspective, from the banking side, I mean, obviously, I guess it's fairly similar in terms of the process that you would go through. But is there anything that you would see specifically that NodeLB does, I guess, in relation to renewable financing versus traditional project financing transactions? Anything there that your credit guys are particularly focused on that comes up? So I guess in Australia, you've got issues around merchant risk, grid strength, etc. Anything that keeps the credit guys up at night?
Yes, absolutely. So first of all, Eugene, we're completely aligned with Euler Hermesthis' approach. We look at the sponsor, the EPC contractor, the O&M, and basically in this world of highly technical, highly complex projects, the experience of the main stakeholders is absolutely key to us. Maybe taking a step back, looking at the difference between a renewable energy transaction and an infrastructure finance deal. There are a few differences, although both are typically put in the same asset class bucket. First of all, the construction is typically shorter for the onshore renewable energy financings, which is a very good thing. However, what's really special is that the underlying cash flows or assets are a lot more volatile than they would be in the infrastructure debt space. So for example, if we compare a road or an airport, setting aside, of course, pandemics and other highly unlikely events, the underlying spot price of electricity is hugely volatile, and to extents that are absolutely not comparable with, say, the volatility of traffic on a toll road. And that means, together with other, I would call typical industrial issues of grid connection, so-called marginal loss factors. So the loss between what is generated and what actually feeds into the grid, curtailment as a byproduct or a consequence of lower grid strength. All those are events that would keep the risk managers and ourselves up at night, in that they tend to occur with higher frequency than pandemics for toll roads and airports. Fortunately, they have relatively lower severity, but they have to be monitored very carefully. And the frequency of those events is also hugely a function of the location of the project on the grid, as well as the, I would call it the dynamic location of the project on the grid. So one day the grid is in a certain state. The next day there could be upgrades to the grid, which would help the project. The day after there could be an enormous new project, new renewables project building right next to the site, which makes the grid weak again. Some other time there could be, for instance, winding down of some power plants nearby that could have an effect on pricing or interconnectors building. So the beauty of this sector, I would say, compared to traditional infrastructure, is that the loss given default is relatively lower. However, the default probability, or the probability of having events in a project, is, I would say, somewhat higher than what we would find in typical infrastructure debt. To mitigate those issues, we typically look at lower gearing compared to traditional infrastructure debt. So it's not uncommon to have 66 or 65% gearing levels compared to say 90% for a PPP. We also conduct extensive due diligence on the environment. So where the new project is located, how it will interact with the neighboring projects, the spot price history, and the projection, because in those markets there is typically a dimension of merchant risk that needs to be factored into the project. Also, we look at grid upgrades, interconnectors between regions, so that we see if, let's say, a high volatility region with an interconnector will then export some of its price volatility into the new market. All this, of course, is further reinforced by the fact that we have experience in all three key regions. There is a strong merchant component in the US market, as well as the Nordics in Europe. And so we have a regular feedback loop within the bank to exchange on the trends that we see and try to compare the different markets. So it's a big topic, broadly in line with what Euler Hermesthis is doing, and we are trying to leverage our global experience as much as possible to make sure we make the right investment decisions.
Yeah, thanks for that, Bastien. I think it's very interesting, because if you look at the history of the structured credit and political risk market, historically, the insurers have been very active with project finance, but it tended to be actually, strangely, in the emerging markets. So we may have seen sort of project financing in places like Indonesia or Vietnam, and in those scenarios, typically you'd have a full PPA in place. So in that situation, merchant risk and say grid strength or curtailment may not have been so much of an issue. But as we're now looking at these more developed markets and banks are using credit insurance in this space, it's an area I think insurers are becoming increasingly focused on. And as you said there, how you approach it in terms of gearing and the due diligence that you do is absolutely crucial. But it'd be interesting to hear from Eugene how you found that transition as an insurer. So, how have you found sort of going from a full PPA situation to having, price volatility and merchant risk? Is that something that, is it still an ongoing discussion at Euler, or are you quite comfortable with those structures now?
No, good question. I think it's fair to say we have been able to support some projects even with the merchant risk as well, some of the mini firms as well. Now, I think a lot boils down to the project itself, and it's really case by case. And it's, well, they say the devil's in the details. And, when you look at the historical trends in those spot prices and what is the break-even cost of the project, if it's, sufficiently low, it's something that we could take a view and say we could live with it. And it's also, like I go back to the very first point, it's really the partners we are behind. So we do take a certain level of comfort from the banks we are behind and their expertise and track record in this space in making the decision. So it wouldn't be a clear yes or no just based on the fact that there's merchant risk or the fact that there's price volatility. I think we need to look at the individual project itself. And also, like what Matthieu mentioned, also if there are any further developments of other projects coming up in the neighboring area that might, affect the future selling price of the spot price for that matter. Yeah.
Yeah, I think those points are absolutely crucial. So I guess just going back to Matthieu. So obviously, we've heard about how the market is developing and is offering new products and sort of facilitating lending. So be interested to hear, Matthieu, from your perspective, as a user of credit insurance and as a long time experienced advocate of the market, do you have an area or sort of key idea as to the role that credit insurance plays in helping you grow your business and distribute your portfolio?
Yes, definitely. Maybe from a bank's perspective, where NodeLB wants to play is at the top level of the markets we are in. So in Australia, we want to be part of every conversation on the renewable energy financing. And if we want to do that with our limited balance sheet power, we need to build distribution platform that is an integral part of the business model of the bank. If we want to be part of every conversation with limited balance sheet and limited capacity to deploy, we need to stay granular. And to do just that, the credit insurance market provides absolutely essential tools to us. The second thing I wanted to say is our approach to distribution is more one based around an ecosystem rather than occasional pockets of liquidity that we want to tap. This is because every deal we do, we want to reach out to the market and make sure our distribution partners have, as much as possible, the same portfolio as we have. So as a result, the three drivers that I look at with a pocket of liquidity distribution market are the depth of that market, so the ability to absorb a flow of deals on a regular basis. I'm looking at reactivity because these deals are typically slow moving from a sponsor perspective, but have to be fast moving from a bank and therefore distribution market perspective. And lastly, reliable. And for this, the credit insurance market is really a great market since it's, I would say, asynchronous to the banking cycle. So when we choose between distributing to banks or distributing to the credit insurance market, what matters to me, since I have to constantly deliver liquidity to my internal stakeholders, is that a banking crisis would not necessarily affect the bank's ability to distribute. And this is something that's absolutely not guaranteed, whereas with the credit insurance market, so far I'm finding the depth, the reactivity, the reliability that I'm looking for. On top of it, it's a different pool of capital, but it's also a silent, I would say, low impact pool of capital. And we are in a market where typically in Australia, as much as in Japan or India, the projects are relatively small. And therefore, the typical sponsor approach is to build a club of banks that either would not distribute every deal, or at least would not distribute every deal to other banks. So the deals are structured from the onset as difficult to distribute. So you would have rating triggers, you would need to be an approved lender by the sponsor, which means have sufficient experience precisely to deal with the hiccups that I mentioned earlier on these deals. And therefore, the fact that credit insurance is a silent tool is very useful. At the same time, it's a bit contradictory, but we like silent, but we also want the distribution partners to know what they're doing. And the fact that we are dealing with the likes of Euler, very experienced financial institutions who, on top of it, often happen to be the insurers on the asset side of the projects, and so have a breadth of knowledge. We find that extremely valuable. We like that insurers have educated, seasoned, but at the same time, different perspective on the risk that we have so that we can feed each other mutually. Lastly, this is a high intellectual property or high knowledge intensity industry. And therefore, we will always favor partners in the distribution process as opposed to competitors, because the last thing we want is to invest the time educating financial institutions that end up replacing us because they have cheaper balance sheet or they can deploy more capacity than we have. And for this, partners like Euler are really valuable to us in that they have the knowledge, they are reactive and reliable. On top of it, they come with initiatives like Green to Green, which are great to see and great ways to further develop the communication around the industry. So it ticks all the boxes.
Excellent. Well, I think that's a pretty much a glowing report there, Matthieu, of the credit insurance market. So great to hear that. Really pleased. I mean, I think, just to sort of comment on some of your points there, and I think they're made extremely well. I think the fact that it is a syndicated market as well is very interesting, in the fact that we do have often a case where we've got sort of more than one insurer as part of the panel, and I think that's encouraging, because not only does it obviously give you as a user plenty of options going forward, but it also demonstrates that there is liquidity for these assets. It's not just one counterparty with their opinion, but then, as you say, they may have a slightly different opinion for the second deal. What we really want to do is create a situation where we're putting deals to market that we are confident that there is liquidity, and you've got insurers looking to support you on a regular basis, and that sort of that flow of transactions and that ability to have some confidence to say, look, we're going to be doing X amount of deals this coming year, and we hope this amount is going to be insured. I think that is something that, as you say, maybe in the banking market, you can't always have that same level of certainty. So I think that is a real benefit, and hopefully that will long continue. From your perspective, Eugene, obviously Matthieu touched upon there, green to green. It's a fantastic initiative that you guys have started. Is it this year or last year? Could you sort of give us some more details on that? And also, I guess, just to expand upon some of Matthieu's points there about how you think that the product is adding value to banks, how are you seeing banks use insurance, and so where do you see that continuing?
Yeah. Thanks, Matthieu, for helping to bring up the green to green product. I think it's a really exciting innovation launched last year, actually. So just to explain a bit of what it is in a nutshell, it is what we do to take a green project, which is certified by a committee, obviously a very stringent committee that's meets all the ESG criteria, and take premiums from that project. Premiums that's paid to insurance, to then reinvest in green bonds for other projects. So in this process, we create a virtuous cycle of recycling capital within the green space to encourage, obviously, more green projects. And this is all, following the principles of the EU taxonomy. So, it's something that's quite widely recognized. And we do have clients, and we're very pleased as well, like NodeLB, to be the first client for us to issue the policy out of Asia Pacific. So we're definitely looking to issue a couple more of them very soon as well. So this is definitely something very exciting that we believe can make a difference for our clients. And yeah, that's just a bit of marketing on my part for the green to green product. But I think more importantly is also talking about what is the role that insurance can play in this area of financing. And I just want to expand a bit more and give a bit more perspective on what the insurers see the value we can bring to the table. I think, first of all, credit insurance definitely is an important capacity provider because it serves to help banks in two ways. One, obviously giving them a better risk management, allowing them to spread their capital over more projects while managing the risk on each one of it. It also enables them, in some cases, to get the MRA status, for example. Sometimes you just need to reach a certain threshold, put up a larger line, and insurance as a silent participant behind the banks actually serves that purpose. And on top of that, as Matthieu had already pointed out, is that we do not compete with the banks. So what happens is that as a non-competing capacity, we could actually increase the bank chances of firstly being retained for a larger line on hotly contested deals, as well as not also having, inevitably them creating a competitor out of this capacity exercise, you see. Now that's probably the first part of what insurance can help. I think there's another aspect which may not be talked about so much. It's also the increase of risk-adjusted returns for the banking clients. Because as you know, insurance, we take a percentage for the bank's net margin in most cases. So there is a certain kind of gearing effect for the banks on the returns. And in some cases, for thinly priced projects, this can actually tip the scale in favor of the thinly priced projects to enable our partner banks to go in on those projects, which otherwise may not have been able to cross sometimes the internal hurdle rates today. And of course, last but not least, I think Matthieu also did point this out, and I do totally agree with him on this one, is that insurers can actually serve as a kind of sounding board for the banks through the questions we raise, and also the final kind of appetites that insurers as a whole, as a market, alternative market show to banks, can also give banks an idea about how feasible a project may be, or may also raise internal questions for the deal team themselves. Yeah.
That's fantastic. Thanks for that, Eugene. It was really interesting to hear about your thoughts there, and also that you mentioned about the green to green product, which was our pleasure to work with both NodeLB and yourselves on that. So actually, just interestingly, just to test a little bit on this. So does that mean, if we're coming to you with all these fantastic renewable deals and ESG deals, do you think that justifies premium reductions, better terms? What are we going to see in reality of all these good transactions that we're working on together? Do you think there is justification to actually look at preferential terms in that space now, or is it still boiling down to the credit of the actual transaction?
Yeah, I think, Lee, this is obviously the top question on everyone's mind, and I would say all things equal, we would definitely prefer to support a meaningful cost, and this is also part of our impact underwriting strategy, part of Allianz Group, where we support the coal phase out, we support any projects where we believe actually makes a positive impact on the society as a whole. Having said that, we do have flexibility on pricing to some degree, obviously, especially when we go behind banks on these deals. Of course, we do have to keep in mind that there will be certain constraints when we come to pricing a risk fairly. But for example, we have demonstrated the flexibility where we participated behind banks on things like sustainably linked loans, where there would be margin notching according to whether the KPIs for this ESGs are met. And what we do is we take a proportion and according to the margins, and we follow the banks as partners on this. So I would say it's possible, obviously, yeah.
Well, that's fantastic to hear, and obviously something we'll take note of going forward. So, super. Thank you very much for that, Eugene. Back to you, Matthieu. I'm interested to hear in terms of the new areas that you are seeing and the developments in either renewable financing or other sectors that we're starting to see come up. So there's a lot of discussion now about hydrogen projects, particularly in Australia. We're starting to see more discussions around batteries being added to renewable projects. So where do you sort of see NodeLB's activities? Where do you see potentially your focus as a bank going forward, and what sort of challenges again might that sort of propose to you?
That's a very good question, Lee. So first of all, I would say when it comes to innovation, we want to focus primarily on things we understand, and where there is a sound industrial rationale, and where we can add value. So that would rule out, innovation financed on a corporate loan basis with very tight margins. With that in mind, I would say the first thing we've done is look at proxy revenue swap offtakes, where we see the logic and the articulation with the current market needs is that the market in Australia has been moving from government PPAs gradually to more corporate style PPAs. And those corporate style PPAs introduce a new dimension of risk, which is the counterparty credit risk of the off-taker. And as a bank, we've struggled at times financing projects with a significant component of counterparty credit risk on the part of the off-taker. And we see the proxy revenue swap type offtake as a very good mitigant to this, since the PRS will basically come in between the project and the corporate off-taker. We've financed already 3 projects that have PRSs attached in Australia. We've done quite a few more in the US, and we believe this is a very good diversification play away from the grid uncertainties, as well as the issues of generation that we see from time to time. So this type of offtake we see as a very positive development to the market. I wouldn't say we would like to only do deals with proxy revenue swaps, because they introduce they are one step away from the actual generation profile, since the generation profile is at least in one of the products notional. So set in the docs rather than the actual one. But we see this product as positive, and we expect it to grow in the market. A second innovation that we are really keen to support is batteries. I've touched upon the difficulties that the grid is sometimes experiencing in Australia off the back of more renewables, intermittent source of energy, feeding the grid with unstable volumes. And the battery could be one of the key tools to basically help with provide ancillary services to the grid operator, and therefore create value while still continuing on the push towards more renewable energy projects. Where we are struggling with is on the business model of the battery. So for us, the key drivers are always, is there an industrial logic? Does that make sense from a client standpoint? And second one, is the value, is the benefit captured in the cash flow, or is it captured elsewhere? At the moment, we are on the final stages of financing our first battery deal in Australia. So this will come very soon. What we want is, when we look at batteries, have the battery as an ancillary service to the project. So no standalone batteries, but batteries that actually contribute to the overall rationale of the project and will help adjust the charge and discharge and delivery of electricity to the grid at the right time of the day, when the grid can accept that extra load. For the other topics that we see in future development, we obviously have rooftop solar and all the industrial plants and warehouses that increasingly are keen to add solar panels to their rooftops. We've looked at portfolios of these. Unfortunately, the deals have not happened, but this could be an innovation that comes very soon, because we believe we have all the necessary knowledge and experience to apprehend those deals. Hydrogen is probably one step away, but also definitely very keen to explore the asset class. And our approach will always be first to do a few deals on our own, so that we capitalize on the experience of the bank, and we build a corpus of knowledge. And once we feel we are ready, we go in for a bigger ticket and offer it to our co-investment partners.
That's excellent. Thank you, Matthieu. Really appreciate the detail there. So Eugene, you've obviously heard some interesting areas of innovation there that NodeLB are looking at. I guess most focus on things like proxy revenue swaps and batteries. Are they areas that you've started to look at as well from an underwriting perspective? Have you been considering those transactions?
Yeah, no, at this point, I think those are still very new for us. I mean, we haven't really come across many of those, to be honest. And I think as what Matthieu said, maybe just because our partners are still trying to build up the track record in that space. So we haven't quite looked in details or haven't received much on this part. But, normally, I mean, as any intro would say, is that the preference is always for tested, proven technologies, and also to the level of what is the complexity of this involvement with this technology and construction involved. So I mean, it was a really good point, and I'm quite relieved to hear when Matthieu said that they would not take any standalone batteries. It's always complementary, and it makes a lot of sense from that point of view, and I can understand why as well. For us as well, so you see, getting comfortable on this potential new areas will be surrounding very similar principles of underwriting, where we would obviously first have to understand what is the level of complexity with the technology. How new are we talking about here as well? And obviously, if they were just part of a bigger project, and then that wouldn't be such a big risk for everyone. On top of that, who are the banks who are looking at it? Have they got the necessary technical expertise? The contractors who are providing those whatever technology, batteries, what were their track records? And sometimes, even if this may not be fully satisfactory at some point, we can take comfort if there were sometimes completion guarantees, either given by a sponsor or even in some emerging countries, more often than not, you get completion guarantees from the government, rather, just because it's important for them to get the project moving, because otherwise, someone has to make the first move. Sometimes the government would have to step in. So stuff like that can help to balance the equation in such new areas as well. Of course, we would like to see more of this development as well, because as you know, the way the market is going is towards the renewables. Everyone's talking about the coal phase out and stuff like that. So at some point, this will become common and mainstream, just like the way the road we have taken with, say, wind farms and all the rest. So everything will eventually become, kind of mainstream at some point of time.
Yeah, I couldn't agree more. I think, if you look at the development that the credit insurance market has taken, even just over the last couple of years, I think it's been very impressive. And as you say, Eugene, I'm very confident that general trend will continue. So let's keep working towards that. So we're coming to the end of the panel today. So thank you very much, gentlemen. It's been a very interesting discussion. It's been fascinating hearing about the story from both a bank's perspective and from an insurer's perspective. I think, renewable financing and ESG is an area that we're really just sort of starting to scratch the surface on in the structured credit insurance market. And I think we'll see a very much a renewed and key focus on this area. And hopefully it will be a great success and continues to grow. So Matthieu, Eugene, thank you very much, and very much appreciated, and goodbye from me.